Friends, it's a pleasure to meet you all again for yet another session on Indian accounting standards. Today, in this Ind AS webinar series, Bindas, we are going to witness a very different and most important standard. I'll say of all the standard, 33, India is 33, earnings per share is very significant. Friends, this standard has nothing to do with accounting. It has no relevance to measurement. We can use a very simple word called DP. The entire EPS, earnings per share, stands on only two single letter word. Single letter English alphabet, DP. So DP is not the display picture in WhatsApp. This DP is for the determination of an earnings per share and presentation of earnings per share, DP. And we are going to discuss along with our seasoned Partha Sarathi for this entire Bintas, C.R. Subramaniam ji. Thank you very much, Mr. Subramaniam, for joining for today's program on Ind AS 33. So in short, this standard is about like DP, we can also use a word called CD, meaning calculate the earnings per share and disclose the earnings per share. This is a disclosure standard. In simple terms, a disclosure standard. Has nothing to do with accounting, debit, credit, and balance sheet or profit and loss account. So in simple terms, apart from accounting, this is an additional disclosure, mandatory disclosure. Now with this very brief prelude, I will invite RSG on the stage to virtual stage to take over and lead this Bindas. Over to you, RSG.
Good afternoon to all. Good afternoon to Gopalakrishna Raju and other members. We have discussed one of the disclosure accounting standard related party. So in the last week we have discussed how to disclose who are all related party and what is a accounting standard, scope and applicability. Now today we are going to discuss the another accounting standard, another disclosure accounting standards, correct? Earning per share, EPS. This is also a disclosure standards. That's all. This is also a disclosure standards. So earning per share is very important even for the investors and for the company to find out what is the performance of the company and compare with the competitors what their performance and how it is being is measured. Even for the company, what is the EPS for the last year and EPS for this year, whether the company's performance is improved or not. So these are all the indicator factors. EPS, earning per share, is also required to be calculated for consolidated financial statement also. So not only standalone financial statements, it is also required to be calculated for consolidated financial statements. Very interesting is how to calculate this earning per shares. What would be your denominator, number of shares? That's very important. You know what is the profit of the company, which is attributable to the equity shareholders. That profit attributable to the equity shareholders divided by number of shares, that is your earning per share. But there are lot of calculations and lot of assumptions are there which we have to verify. And the accounting standard also, talks about dilution in equity shares, anti-dilution in equity shares, and also weighted average, all which are all there in the accounting standards, which we have to go through. So today we are going to discuss on earning per share accounting standard today, which we are going to discuss. Sir, my first question is, what is the applicability of this accounting standard, scope and applicability of these accounting standards? Yes, sir.
Well, I will directly take you to the respective standard itself. Hope my screen is visible. Is my screen visible? Uh, 1 minute. Yes. So hope the screen is visible.
Yes, visible.
So now what I will do, I'll first take you to a very simple number. Please look at this is the Rashtriya Chemicals and Fertilizers Limited stock movement. Here they say price earning ratio is 52.4. Price earning ratio. And the current price is 176. 176. Earnings per share is actually, so on earnings, 52 times is the price. So this is the main connect between. This is a very, very important connector between the price earning and the market price. How much you invest actually for one share, 176 rupees. Out of 176 rupees you invest, how much the company will earn? Okay, so that is for every 52 rupees, 1 rupee to earn. That is the message of this price earning ratio. And that is very, very significant. And let me also take you to the comparables. Please look at, along with the other comparables, look at a company called Factor. That is actually 606 times is the price. That means very costly. Which is the cheapest? GSFC, Natty Fertilizer. That means for every 16 rupees you invest, 1 rupee you will get. So 6.25% you will earn for your. Here, you will actually earn 3.36 out of 176 rupees. So it is actually 2% only you will earn. So 1.91%. Here you will earn 6%. So lesser the PE, more the return. Technically, the return for the investors. More the. And this will actually guide you whether the price is costly or less costly. So that is where this standard is very critical. And I will take you to the Indian accounting standard, the earnings per share Ind AS 33 objective I will take. Now please look at the objective here, which I have given it in a special number here. And I want to make one point with respect to 33. In Rigveda, they say there are so many devas, only 33 devas are counted. So this is almost equivalent to in Marathi, in Maharashtra, deva means it refers to Bhagavan. Okay. So this earnings per share is actually the Bhagavan for every listed company, even for unlisted company also. So 33 means Bhagavan, Deva. Okay. And how this 33 is counted, they have given in Rigveda 11 in earth, 11 in space and heaven, that and all different. 33 means God. Okay. Now let me take you to the objective. Please look at this objective. The purpose of this standard is DP. Okay. Determination and presentation of the earnings per share. So that there is a comparison. Now that's why, please look at this. Different entities, differing reporting period, same. That comparison to improve the performance comparison between different entities. That's why I showed you this. Now let me show you for Airtel. Look at Airtel, Bharti Airtel. 71. Price is 1682. Bharti Airtel. Okay. 1682 rupees per share. And your price earning ratio is 71. My God. So what is your earnings per share? So look at this EPS. So this is actually 23 times. I mean 23 rupees per share. And you know how much you are going to earn by investing? It's only hardly 1.4% is what will be the earnings. So 71 will be the. So now compare with the peers here. With the same telecom companies, Bharti Airtel, Bharti Hexacom, both are actually almost 70 times. Maybe the cheapest is Railtel Corporation. Okay, so that is the cheapest. Maybe the nearest cheapest is 50 times. So that is where we need to appreciate the purpose of this particular standard. Determination and presentation, DP of earnings per share. Okay, so very simple terms. I will call this as DP. Good. Over to RS.
Yes. So the earning per share, these accounting standards will give you what is the earning per share of the company so that you can compare within the company the previous period and for the current period, is there any improvement? And also you can compare with your competitors and find out whether you are whether your earning per share is competing with the other companies or not. So that is the purpose. So it is only for the purpose of presentation, and it is only a disclosure accounting standards. That's very important. Sir, now the next question is, you discussed about this accounting in the accounting standards, that our own accounting standards, accounting standard 20, I think. What is the difference between these two?
Well, many are there, but I'll try to share with you a few fundamental difference. Now, please look at this. For example, there are convertible instruments, and there are potential diluted earnings per share. So these are all some terms which, please look at this. In Ind AS 33, disclosure is required for instruments that could potentially dilute the basic earnings per share. So I will be bringing before you what is earnings per share, what is meant by diluted earnings per share, what is meant by potentially, I repeat the word, what is meant by potential ordinary shares, the shares which will become shares in days to come. So especially contingently issuable shares. Now, sometimes there can be purchase of a company. So while I buy a company, I will say, so you sell the company to me, I will give you 10 crores worth of my company shares. No, you will say, no, I want your company shares 15 crores. In case after merger, the combined turnover crosses 200 crore, I'll give you additional shares. So these kind of concepts are not discussed in AS20. So that is called potentially diluted. So in case, so I have a potential to make money in future. Now, then I have to issue shares. If I issue shares, my number of shares will go up. So technically, earnings per share is simple. Yeah, mathematics, numerator by denominator. Numerator profit, earnings, denominator shares. So if the number of shares in denominator goes up, become bigger, my EPS will come down. EPS is coming down, my price earning ratio will be going up. So that means my price will be costlier. It will be costly. So more the P, price is costlier. Lesser the P, price is cheaper. This is the model. So therefore, the concept of dilution, anti-dilution, potentially issuable shares, potential shares, meaning today it is not ordinary. Today it is not a equity share. In future, it will be an equity share. So all these concepts are new, and it is already there, but it is considered in Ind AS 33. There are many such concepts which Ind AS 33 has considered, which AS20 has not considered. So I will say it is version 1 and version 2. And in terms of the current generation, see today the financial instruments, current gen financial instruments and all, they don't come with a plain vanilla. I will issue only preference share. I'll only issue equity share. No, I'll issue convertible preference shares. I will say optionally redeemable convertible preference share. What is option? Option is with the company issuer or option with the holder. He will say, no. I don't want equity. Give me money. So that is called redeemable. No, I will convert it. So then how do I bring that in my denominator? Oh, numerator by denominator. Numerator is profit, denominator is shares. So all these are considered in Ind AS 33. How we will consider it, we'll see that. Quite an interesting standard. That is why Ind AS 33, even though it is a disclosure standard, the number of paras, you will be surprised. The number of paras are almost 73 paras. Just a disclosure standard, but 73 paras are there. So that means that much of complexities are there with respect to this. For example, you need to, if you discontinue the operation, So then you need to give for the continuing operations EPS, discontinued operations EPS also you need to give. So quite a complicated standard, I will say. It is not a simple standard as we think, because the disclosure, for example, there are discontinued, there are 7 units, one is discontinued and 6 are continued. Now, how will you present it in your P&L account? So how your EPS will be? So these are all discussed in greater detail. So over to RSG.
Yes. So there are difference between that our accounting standard and the Ind accounting standard, because Ind accounting standard is taken into account of the contingent issue of shares, future issue of shares, which is not there in Ind accounting standards. Correct, sir? So
Correct,
that is very
absolutely.
important. You are used frequently the terms dilutions of shares, EPS. So what do you mean by that, sir?
Well, so let me take you to the concept of dilution directly. Now, please come to this definition. This is para number 5 speaks about the dilution part. Now, of course, if you look at the dilution and anti-dilution definition will be almost the same. So almost it's just the reverse of it. Now, let me give you the earnings per share. So earnings per share is profit divided by the, that is, we can call it as earnings divided by the number of shares. So this is earnings per share. So this will be in rupees. Okay. So this will be in numbers. So then when you divide earnings by numbers, rupees by numbers, answer what you get is, this is
EPS.
rupees per share. When you say number of shares. So it will get rupees per share. So that is your earnings per share. So this is numerator. So this is your numerator. So this is your denominator. So numerator is earnings in rupees. Denominator is shares in numbers. Now, in case my earnings is 5,000 and the number of shares is 500. So my EPS will be this divided by 500. So 10 rupees. Now, instead of 500, it is 600. Then it is not 10 rupees. It becomes 8.33. It becomes 700, 7.14, 800, 6. This is called dilution. So when the denominator increases, your earnings per share. So that means number of shares increases. When share increases, it is called dilution. Now come to the definition here. So reduction in earnings per share. That is what I gave the example here. So from 10 rupees, it came to 6.25. Reduction in earnings per share on increase resulting on the convertible instruments converted to equity, options exercised to equity. So then your number of shares will increase, that is dilution. The exactly
Yes.
opposite concept is anti-dilution. So this is considered in greater detail in our earnings per share standard, Ind AS 33, so which we will discuss in detail. Over to RSG.
Yes. So therefore, dilution means reduction in price, earning per share, increasing in number of shares. So
Yeah.
this increasing in number of shares will happen in certain circumstances. What will happen? Your convertible debentures may be converted into equity shares. In those
Yeah, simple
circumstances,
simple
definitely.
example is CCD,
Yes,
compulsorily convertible debentures. So then at the
yes,
time I issue itself, I know I have to compulsorily
correct,
convert. But there is a
correct,
problem. There is a problem. If it is CCD means I know very well. So when I am going to issue, when it will become equity. But if it is
correct.
optionally redeemable, convertible preference shares, so it is called ORCPS. Optionally redeemable or convertible. So that means the option is with somebody. So then who is having the option? So issuer is having the option or the holder is having the option. Number one question. Number two, then when till what time it will be preference shares or debentures? When the option will be exercised? So when it will not be exercised? So all these questions need to answer to come. So that is why the standard is quite detailed. We'll go into that one by one. I'm adding slowly masala. So being a Sunday, it is a masala day. So after 1 p.m. we are going to have a sumptuous lunch in our home. So let us understand how this masala is there. And I'm going to share with you some of the annual reports also. Airtel annual report, Zomato annual report, RCF annual report, Bajaj Auto Limited's annual report, to give you the different flavors of this masala. Over to RSG.
Yes. So therefore, simply this accounting standard is a disclosure accounting standard one. Second is to find out what is the denominator. That's very important. Whether denominator is only my opening share capital or is there any change during the year? Whether the shares are converted into equity shares or not. These are all. Sometimes preference shares also may be converted into equity shares. So these are all taken into account to find out what is the earning per shares. Yes. So excellent,
Actually,
sir.
in a plain vanilla situation, there is no movement of
Correct.
my stocks. There is no movement in my share register. Okay, register of members. My opening number of shares and closing number of shares are same. So then I will take the same number. But what will happen
Correct.
in between? There will be buyback. In between, there will be issue of shares. All these, if it happens, if there is a movement. Then how do
Yes.
I take it? Then there is
Yes.
one more concept which is introduced. That is called WANES. WANES. It is called weighted average number of shares. So weighted means on what weight, all this. So one by one, we'll try to understand the masala. So
Yes.
it is very
Yes.
simple standard, but we only make it complicated by adding more masala to it. Okay, good.
Yes. So therefore, even if bonus share is issued in between, right share is
Yes.
issued, even in such a situations that your earning per shares will accordingly you have to calculate. Sir,
And there will be even issues like should I what is the profit earnings? That is why they say profit
correct,
attributable to the equity
correct,
shareholders, because numerator is profit earnings, denominator is number of shares, equity shares. So that earnings should belong to equity. Now what if a preference shareholders are there? Unko bhi pay kar do. That means whatever preference dividend that you have to remove it. So after the preference dividend only you have to. Sometimes these preference shareholders will be converted. But then what I will do? Should I have to give minus the dividend? So how whether it will be I will factor it in the numerator or factor it in the denominator. All these are interesting situations. So I'll bring the circumstances, examples to give you the solutions for it. Good.
okay, yes, sir. The next question is, what is the ordinary shares? Yes, you also use these terms frequently, ordinary shares issues. What do you
Yeah.
mean by the ordinary shares issues?
Actually, in the Companies Act, they have defined only the word called share. Okay. The Companies Act definition only has the word called share. But here only we have a word called ordinary share and potential ordinary share. Now I'll just share with you that standard here. Please look at this standard. So this is the, look at this word here. Uh, ordinary share, potential ordinary share. Please look at this. This is ordinary share or equity that is subordinate to all other classes of equity instruments. So sometimes we have certain shares. Okay, this is, I'll give you an example. Okay, why this word they call it as subordinate to all other class of equity. So that means there are other, I'll give you, whenever you have certain acquisitions are done. So you sell a company, so money will not come to you, or somebody wants to invest in your company. So then money will only come in tranches. So in one shot, I will say 100 crore investor. He will not invest 100 crore. He will only invest maybe 20 crore like that. So until the last payment is received, I will not make him ordinary share. I will only give him equity, but I will not give him the voting rights. He will be equity, but so that is why equity with the different classes. This is very. Can you issue such equity under the Companies Act as you can issue? So that is why to understand earnings per share, you need to be very thorough with the Companies Act also. Okay, can you issue multiple classes of shares? Yes, you can issue. Okay, so that is why this is very important. Now, what is the potential ordinary shares? The financial instrument that may entitle its holder to ordinary shares. So that is where today I am not ordinary shareholder, but tomorrow I am a potential ordinary share. So I am going to, today I have invested money, I've got shares, but not ordinary shares. I've got shares. but that will be one step less. That is also ordinary share certificate. That is also share certificate only, but not ordinary share. Ordinary share will have full right, and the other classes of shares will not have the full right. So, but they will become a potential ordinary shares in future. So then, how do I take this person as a denominator? Okay. So very interesting definition that has been brought out. So I'll take you to some of the examples also to appreciate this.
Okay.
Over to RS.
Sir, you have explained what is ordinary shares and potential shares. Ordinary share means they have all the rights, but a potential shareholder means that they will exercise rights in futures. That's all. That is the difference, main difference. Today they don't have any rights. That's all. Correct, sir? My
Absolutely.
understanding? Yes.
Absolutely.
Now you talks about, discussed about earning shares, earning per shares. Can you please explain what is earnings, what is shares?
Now I'll just come to one Companies Act section alone, which will give you the various concepts here. So hope you are able to visualize this. Hope this is visible with respect to Companies Act. Please look at this. The kinds of share capital. Please look at the equity share capital with voting rights, with the differential rights, voting or otherwise in accordance with rules. Please look at this. So now I'll bring it to 48 also. Look at 48. Variation in rights. So you can have different classes of shares. Please look at this. So that is why the concept of potential ordinary shares are coming. Now I'll take you to some of the interesting annual reports. Please look at this annual report. This is the annual report of one company. I'll take you to this balance sheet and P&L. This is please look at this P&L. This is one P&L I want to show you. Please look at this. Please look at this. This is one company. Maybe it is visible or not, I don't know. Utkal Ashok Hotel Corporation Limited. Now, please look at this. You have discontinued operations and continued operations. Now, you have the earnings per share for the continuing operations, and you have the earnings per share for the discontinued operations also. Please look at it. Actually, there is no income. So, if the numerator is 0, you will have 0 only. But please look at this for continuing operations. So you need to give this disclosure separately. Okay, separately. Now I'll come for because here the basic and diluted both are same. Now what I will do, I will take you to the diluted part, which is quite critical, and I will take you to Zomato. So where is Zomato? I think Zomato is here. Please look at this Zomato. This is earnings per share of Zomato. So the basic earnings per share and diluted earnings per share amounts are calculated by dividing the profits attributable to the owners. Okay. So here the basic weighted average number of shares is almost some 849 crore. Now look at for diluted EPS share, it is 875 crore. So that is the denominator. So thereby your 41 paisa becomes 40 paisa, become more the number of shares. It's dilution. Now you will come to a conclusion. You will ask a question. So what will be the dilution part which I have to include, which I shouldn't include? So I'll come to that particular part one by one. Now please look at para number 21. Okay, please look at para number 21. So these are the shares which you will include. Okay, please look at para number 19 first. For the purpose of calculating basic earnings per share, the number of ordinary shares shall be the weighted average number of ordinary shares. When you say weighted average number of ordinary shares, opening and closing and during the year, if there is any movement plus and minus, you will give the weightage to the time. So during the period. Now please look at one number here. So opening balance was 1 lakh shares, and June you have issued an equity shares. 9th November there is a converted preference shares to equity. 22nd February there is buyback. So you will give weight for all this. So that means you have issued June shares for June 15 days, July, August, September, October, November, December, January, February, March. So like that, the 8th November you are converted. Buyback is minus, so is reverse. So I will give the weightage for all this. Please look at the number of days weightage. Then I will take the weightage number of shares. Then my average closing balance is 177,233. So technically, my closing number of shares is 205, but I will not divide by 205 because the weighted average number of shares is 177,233. So I'm not going into the arithmetic part of it, so which you can calculate it later. So I will give the weightage for the number of days the number of shares were held. So that's it. So that is how this. Please look at the Zomato. So this number of shares, how we got it for basic shares. Now, what will be included in basic shares? What will be included in diluted shares?
Correct.
Okay. So that is where the real part is there. So I'll first take you to what you will include in the basic shares. Okay, what you call the ordinary shares. Okay. Now, when you have to that is why there is a term, very, very important term, okay, in the Companies Act. I'll take you to Companies Act here. Please look at Companies Act, okay. There is a concept called issue of shares, okay. Authorized capital is not the point. So I'll take you to section 62. Look at 62. Issue of share capital. This is very important, okay. Issue of certificate, issue of shares at discount. This issue is very important. Okay, so not your authorized capital. Have you? That is why authorized capital, issued capital. Now paid up is next. You have issued. Sometimes it will not be paid up. It will be partly paid. But partly paid, I will not. I am only concerned about the word called issue. So that is why please come to this word. Okay, where is the standard? Now look at the standard. Ordinary share issued in exchange for cash are included when cash is receivable. Okay. Shares are usually included in weighted average number of shares on the date consideration is receivable, which generally is the date of issue. So this word receivable is very important. No. Only paid up only I will take. Paid means I received the money, I given shares. So that is why please understand the fundamental difference between authorized capital, issued capital, okay, paid up capital, okay, unpaid capital, okay, and unissued capital. So a lot of so that means out of issued, so authorized will be 1 lakh shares, so maybe 10 lakh shares, 1 crore or whatever is the number of shares, whatever it is. So this is the number of so hope I will not be very theoretical here. So out of 1 crore, maybe I've only issued 75 lakhs. Now out of 75 lakhs, okay. So the paid up is, it is actually 10 rupee share. So paid up is not actually 10. Paid up is only actually say 8 rupees. Balance 2 is unpaid. So this is unpaid. 2 rupees is unpaid. So that means what is unissued? Still to be issued, not issued, is actually 25 lakh shares. Okay. So this is where I need to be very careful about. Okay. So now come to this definition. So shares are usually included in the weighted average, the number of shares that has been issued. Okay, usually include and from the data consideration. Ordinary share issued. Okay, this word is very important. Okay. Similarly, ordinary share issued. Okay, when sometimes dividend has to be given, but dividend don't pay me dividend reinvest and give it to me in shares. Okay, so again issued. That's very important. Ordinary share issued. Okay, issued as a result of conversion of debt. So all are issued shares. Ordinary share issued again. So in place of interest or principal are included at the date of interest ceases. Ordinary share issued, okay, in exchange of settlement of a liability. Okay, maybe I'm unable to pay my creditors, I'll give him shares. Ordinary share issued for consideration other than cash. That means it is for asset. So intangible asset for which I am giving equity. So ordinary issued for consideration for the acquisition of an asset other than cash when it is included or included as on the date on which the acquisition is recognized in books of accounts. Even for your information, this section 62, which I was discussing, this is section 62, further issue of share capital. There is a rule number 13 in companies issue of shares and prospectus. So there, rule number 13, they say, as you are going to recognize the asset as per the accounting standard. So they have connected accounting standard and Companies Act in rule number 13. So I can show you the rule number also, the company's rules. Okay. I'll take you to that rules. Please look at this. Act and rules. Look at this. E-books. In that, look at this rules. So in this rules, share capital and debenture rules. In this rule number 13, look at this. Issue of shares on preferential basis. So here they have mentioned about the standard. Look at the standard. So they have mentioned, look at the accounting standard. Hope this is visible to you, but anyhow, if it is not visible also, I'll download and show it. So look at this. Look at this rule. I'll just show you that rule. So there, in Companies Act rule, they mention about the accounting standard. So hope it is visible. Look at this. So standard. Look at this. Look at this. Where for non-cash consideration takes the form of depreciable amortized asset, okay, it shall be carried to the balance sheet of the company in accordance with the accounting standards. Please look at this. It is given there. So it is not that. So the further issue of share capital also there the word standard is used. So that is why I'm coming here. Where am I? So sorry for that. It is here. So here, that is where. So issued for consideration other than cash. Ordinary shares issued for rendering of services. So that is also. So it can be even for exchange of service. You give that is for not for consideration other than cash. Again for consideration other than cash. It can be for you bring the asset or you give the service, past service or future service. For that also shares are issued. So the timing of the inclusion of ordinary share determined by the terms and conditions attaching to their issue. The word issue is very important. So that means even if the amount is outstanding, okay. So that is why that is very, very important. So issued for exchange for included even when the cash is receivable. Okay. So that is what is to be concluded. You need to be very careful about it. Okay. So let me now leave the floor for RSG.
Okay. So ordinary shares issued, how to calculate even for purchase of assets or for rendering a services also the shares may be issued. These are all is required to be considered. Now the question is contingency share agreements. So what do you mean that, sir?
So I think this is a very, very important question.
Yes.
I will again take you to the standard here. Now come to this contingency share agreement. Now this is an agreement to issue shares that are dependent on satisfaction of specified conditions. Example, only after you complete 3 years in my company, I'll issue shares like an ESOP.
Correct.
So only when I acquire a company, I will say total purchase consideration is 15 crore. 10 crore I'll give now, balance 5 crore only when the combined turnover crosses 500 crore. If the combined turnover doesn't cross 500 crore in 3 years' time, that's Govinda. That shares I am not going to issue at all. So that is where this contingent share agreement is there. Now, this is called contingently issuable ordinary share. Ordinary share issuable for little or no cash or other consideration upon the satisfaction of specified condition in a contingent share agreement. Now, will you include that in the denominator? Now, as on the date of the 31st March, what is the position of that that commitment? So, whether that contingency will happen or not. So, you have to go by a management criteria. So we need an answer. How the performance is happening? Will you touch that based on the track record from the beginning and you are midway? Will you happen? So if it is possible, okay. If it is not possible in the near future, so this is where the denominator matters a lot. I'll just bring before to you some interesting part. Please look at this. This is Bharti Airtel. Okay, this is the Bharti Airtel. Sunil Mittal Bharti has signed this. Now, please look at this earnings per share. Basic as well as diluted. 14.8 rupees per share and 14.57. I'll take you to para number 33. So, look at para number 33. Hope it is visible to you. 23 here. And this is 33 earnings per share. Now, please look at this. This is profit attributable to the shareholders as per statement of profit and loss account. Weighted average number of shares. This is 56 some crore shares. So weighted average of 56 lakh shares. So please look at this. So this is the number of shares which will include. So following is the reconciliation equity shares in computing basic and diluted. So please look at this. So while diluting, they have considered the employee share options also. That means they are called potential. In future, they will become shareholder. Dilution due to partly paid equity shares, that will become fully paid equity shares. Okay. So this has been diluted. So this is where the interesting part is. So for the year ended, the FCCBs were excluded from the calculation of diluted weighted average number of equity shares as their effect would have been anti-dilutive. So that means it will actually reduce. Anti-dilutive means the number of shares will go up. I mean, the number of shares will actually not increase. It will actually decrease. Once it decreases, earnings per share will go up. So that is why certain things. So we go by a concept called the positive sides are not actually considered or not disclosed. Only the negative sides are actually to be disclosed. So that is the premise at which. So we will say accounting, generally accepted accounting principles, okay, at which these are considered. So I'll now leave the floor to RSG.
Yes. Sir, we have also discussed about the dilution of a basic shares. So can you please give with the examples?
Good. So let me take you to the page number, the para number 30. So that's very, very important. So because I've given you the numbers now. So now I'll give you the fundamental difference between basic and dilutive with the paragraph. Now come to this para number 30. So this is the para that speaks about the diluted earnings per share. Entity shall calculate diluted earnings per share. So if presented from continuing operations or continuing discontinued, I gave you the example also. For both we need to give. Now for calculating the diluted earnings per share, an entity shall adjust the profit and loss attributable to ordinary equity shareholders and the weighted average number of shares outstanding for the effects of the diluted potential equity shares. How that means numerator as well as denominator. Both will be tuned. So what will be tuned? Now please look at para number 32, 33 and 34. Now 33 speaks about what you will dilute in the numerator. For the purpose of calculating diluted earnings per share, an entity shall adjust profit and loss attributable to ordinary equity shareholders. What you will do as calculated by after tax effect of any dividend or other items relative to dilutive potential ordinary shares deducted in arriving at the profit or loss to ordinary equity shareholders of the parent entity. Now, there is one more question also I need to give. Now, for the standalone, also will you calculate and consolidated also you will calculate, because in both those places, every time they speak about parent entity and the subsidiary entity. So once I will take you to para number 4 and then I'll come back here. Please look at para number 4 that speaks about the concept with applicable for consolidated as well as separate financial statement. Now, please look at this. Entity shall not present in consolidated financial statement earnings per share based on information given in separate financial statement, and shall not present in separate financial statement earnings per share based on information given in consolidated financial statement. So, but please look at this. EPS disclosure required for both. EPS computation should be based on information in consolidated, information in separate financial statement. So that means if you have now, I'll just share with you this para 4 point alone. Now, please look at the Zomato. Zomato has the consolidated financial statements as well as the standalone. So first I'll take you to standalone part. I will explain this question, then I'll come to that part. So then only you will be clear with both the pointers which I am discussing. So this is your standalone. So this is with respect to consolidated. So I'll take you to standalone part. So statutory. One minute. So this part is so this is independent auditor's report of consolidated. So that means I have the standalone here. Standalone is here. Where the standalone is gone. So maybe I'll take you to this Airtel. Airtel has both standalone and consolidated. Now please come to this standalone part. This is consolidated and this is standalone. Now please come to the standalone P&L. This is your notes. This is the standalone profit and loss account of your Bharti Airtel. Now here I am presenting the basic and diluted EPS 32. Now what the standard paragraph says, when an entity presents both consolidated and separate financial statement. Okay. Now Bharti Airtel presents both consolidated and separate financial statements. So then consolidated and separate financial statement, the disclosure required by this standard, Ind AS 33, shall be presented both in consolidated and separate financial statement. Now, how you will do it? For the P&L of standalone, you will divide by the number of equity shares with respect to that. So, in consolidated financial statement, such a disclosure shall be based on consolidated information. With respect to standalone, it will go by the standalone information. Okay. So, based on the information given in the separate financial statement, and in separate, will be based on separate financial statement. Now, please look at the numerator and denominator, both are not same as far as separate and consolidated. Now, please look at this. So, this is your profit available for distribution and the number of shares. This is 32. So, this is your EBITDA, profit and loss, profit before tax, current tax. So, total this is actually loss. So, not an income. That is why your earnings per share is negative. Actually, I want to show you one more company where when the earnings per share is negative, they are not giving it as negative. They are showing it as dash. Okay. I want to show that particular difference also. Now, I want to share with you the disclosure differences. 2-3 differences I want to give. Number one, when negative is there, you have to give negative. Okay. So here negative is there. There is one particular company, if negative is there, they give dash 0 because the word earnings is very important. Can the earnings be negative? Nowhere the standard speaks about that. Okay. So that is why, as a good governance, even if your earnings is negative, you have to give. Okay. Now, only when the earnings is zero, your numerator will be zero. Now come to Zomato. Okay, please come to now. This 32 I will discuss. Then I'll go to the, because numerator and denominator, how it will differ, how the dilution comes, dilution for standalone, dilution for consolidation, all these aspects. Now come to 32. So where is 32 here? 17, 21, and 32. Look at this. A by C. So here, loss attributable to equity shareholders as per statement of profit and loss. Now I am coming to the disclosure part. Okay. Now please come to the disclosure part here. So this is your disclosure. Now I'll take you to para number 70. Look at 70. The entity shall disclose what? Amount used as in the numerator. What is the weighted average number of shares used in the denominator in calculating basic and diluted, and the reconciliation of this denominator to each other. Okay, basic and diluted. Why basic is less, diluted is more? You have to give that reconciliation. Okay, now please look at this. So here the basic and dilution both are same. If basic and dilution both are same, do you need a reconciliation? No, you don't need a reconciliation. So here that is a basic and dilution both are given. A by B and A by C both are same. But there are number one, when basic and dilution both are same, you have to give two separate lines. You cannot say basic and diluted. Okay. Sometimes it will be same. You have to give two separate lines. So they have made that point. There are certain standards, they will say both are same lines. Number one. Number two, negative. Should I have to give negative or not? Now come to the standard.
Yes.
So nowhere the standard specifies. Now I'll come to this. Examples of transaction in 70 to include. Now I'll come to this. If an entity, please look at 73. This is a very important para. If an entity discloses, in addition to basic and diluted, amount per share using a reported component of the statement of P&L other than one required by the standard, such amount shall be calculated using the weighted average number of shares relating to such component. So you can actually take any one more component also, because numerator you are taking earnings. You can even take turnover also, you can take turnover per share, cost per share also you can take. Why only earnings per share? Turnover per share also you can give. That is why they use the word this. So if an entity discloses, in addition, amounts per share using a reported component of the statement, such amount shall be calculated using the weighted average number of shares. Okay. So that also they give. I'll give you few more, because I have collected minimum 12 to 15 annual reports where different kinds of disclosures are given. Because it's only disclosure. It's only numerator by denominator. So why should I give only EPS? I'll give turnover per share. I'll give my cost per share, my operating cost per share. So all this. So it is, you can give additional. That is why the word is if. Okay. So I'll now go to, and one more thing, please come to this FCCB. Okay. FCCBs are unpaid portion of the partly paid shares. Okay. Foreign convertible bonds. Okay. And unpaid portion of partly paid shares were excluded from the calculation of diluted weighted average number of shares, as their effect would be anti-dilutive. Okay, so this is one aspect which has not been considered. Now I will come to the last one more part with respect to consolidated, and then I leave the floor open. So consolidated statement of P&L. Now come here. Here please look at this. So this is a consolidation of standalone plus the other subsidiary companies also. Here the earnings per share, face value 5 rupees each. Now here it is not loss, it is positive. Okay, so there basic and dilution. Okay, so it is not loss. So standalone is a loss, consolidation is a profit. Okay, so I'll come to the para number 33. Come to para number 33. Quite an interesting number. Look at this. Here you have the difference between basic and dilution. So therefore, you are giving the reconciliation. So reconciliation will come. So as per your standard, now what your standard says? Your standard says the reconciliation shall include the individual effect of each class of instrument that affects the earnings per share. Each class, employee share options, partly paid equity. Okay, you have to give each class. You are not giving that ESOP and partly paid in one line. You can give. You have to give class wise. You have to give the individual differences. Okay. Similarly, the amount used as the numerator in calculating basic and diluted earnings per share and the reconciliation of those amount. Now here I am coming for this. So profit attributable to equity shareholder as per profit and loss 83,859. Now this is the profit numerator applicable for both basic as well as diluted EPS. Now very similar to basic EPS and diluted EPS. So denominator, two denominators, but only one numerator. If there are two denominators, you need a reconciliation. If you have two numerators, again you need a reconciliation for the earnings also. That is what it says. The amount used as a numerator in calculating basic and the reconciliation of this amount. So this is where the same paragraph has two earnings for basic earnings, diluted earnings, and where dilution will happen. So that is where I am bringing it to para number 33. Okay. So I think with this I will rest my case so that you will, for the purpose of calculating diluted earnings, an entity shall adjust profit attributable to ordinary equity shareholders. Okay. Now come to para number 12. Para number 12 is, this is the profit attributable to, this is a numerator for basic EPS. So from 12, you will make some adjustments. Now what is that adjustment? This is the adjustment. So look at this. Yes. So for this, what is the adjustment? Any dividend, any interest, any other. So what is any interest recognized in the period relative to the dilutive potential ordinary shares? For example, there is a compulsorily convertible debentures. There is a compulsorily convertible debentures, and that debenture for which interest is payable or interest is paid. Any interest recognized in the period related to dilutive potential ordinary shares. Now, you have actually reduced the interest and then profit after interest only you pay tax. Now, when you are doing the dilutive, they are going to be converted into compulsory equity shares. So that means you are going to increase the number of shares. Denominator will be increased. Numerator also should be increased. How can you leave it? When you are increasing the denominator, how can you not leave the numerator? So that is why that interest also should be added. So this is where the dilution part you have to be careful about. So I will now leave the floor open to RSG for your final remarks and the conclusion. Hope the point I have driven properly.
Excellent presentation, sir. So today we learned about earning per share as per Ind accounting standard, as per accounting standard 20, and its applicability, that is very important. Basic and diluted shares, how to calculate, when denominator in shares will change. When there is no change at all, then only basic shares you have to calculate. Whenever there is a changes in denominators, then only that the diluted shares will applicable. Anti-diluted, that also we explained. Ordinary shares, what is mean by ordinary shares, that is also, and the contingent agreements. Because of that, whether it will shareholding will increase or not. And finally, you talked about conversion into equity. In such a situation, not only the denominator, you have to also accordingly, you have to add back the interest paid on the debentures in the numerators. That is, I learned today. That is an interesting part. You have presented very well, sir. So thank you for your presentations on behalf of all the participants, and thank you for your nice presentation, sir. Thank you.
Friends, it's always a pleasure to share thoughts along with RSG, and special thanks to RSG for joining our Bindas program. And every Sunday, don't miss our Bindas program. So we'll be announcing in our social media and in our WhatsApp group to join this program. Else, you are always welcome to come to this YouTube channel to watch all the videos which we have broadcasted and available for viewing at any point of time. Thank you very much.
Thank you, sir. Thank you.